All right, good morning, everybody. Small crowd this morning so far. I might be a minute early. How's everyone doing? Good morning, Gary. Gary, you were busy. I like it. Nice job. We'll go through and look at those. Did you need feedback on those? Good morning, Rain. Or are you just showing how busy you can be? And I love it, man. Um, cool. So, Gary, you're at the point where if you have a question, ask a question. Jason Theme, good morning. Mike M, nice to see you. We'll go through and look at it. I'll point out what I see. But definitely, if you have specifics, let me know. Your chart reading's solid. So a lot of the times, I feel like I'm telling you what you already know. And I don't want to be too redundant with you. But I appreciate each and every picture. Yeah, no worries. No worries. So how many charts are you going to keep adding until you get funded? That's what I ask myself. If I'm not doing it simple, how much am I going to add? And that's where my journey's taken me, and I'm always willing to share my journey, guys. Um, so if you have questions, let me know, and we'll go through them. And Gary, we'll go through everything that you're talking about. Um, and then Gary, maybe we'll correspond privately, but I have a couple questions that I want you to think about, and I don't want to put you on the spot in the room. So um, let's uh, let's get going today, guys. And Jeff, we're gonna get to yours right now, and let's not talk about the trade so much, Jeff. Let's talk about the charts. Hopefully, you're with me here, not grabbing a cup of coffee. And guys, this is just for everybody. One of the things that helps me, really, and it helps me give you great feedback, is tell me why you did what you did, right? Tell me why you were looking for this trade. Jeff, if you write on your chart, hey, Mark, this is what I was looking at. So let me take a picture of your chart. And writing your rules, guys, this is so important. Here's a chart that's annotated. I had odds favorable momentum. There was nothing in my way, right? And I had an area inside of favorable large triggers. Guys, this is identifying the rules for a high probability trend trade. Your trade may not be a high probability trend trade. Your trade might be a counter trend trade, right? Your trade might be an HVA trade. Your trade might be a momentum style trade. Guys, I'm comfortable with everything, right? I'm comfortable with what you're looking at. But if you take a second to tell me, because Jeff, first glance, what I see is my trend is down, right? That red background letting me know that the trend is down, letting me know that I really should be thinking about shorts. Counter trend trades become difficult, even when they work now and then. I've got small triggers outside of the large triggers, which means that I'm fighting momentum and I'm fighting direction on this large chart, this general temperature of the market, right? This little break in the smalls isn't enough to tell me that the market is reversing, especially if it's not coming from anywhere. It's really kind of a pivot from nowhere, if you will. So when I have a pivot from nowhere, that's at least my first stopping point, which is good. But on your smaller chart, you're in a downtrend at the time of the circle. Your synthetics are down, your large are down, your small are down. Everything on every chart says down. Jeff, do you see that? And really everybody, if everything says down, your brain's going to say, hey, let's go long. Because if I'm first, I'm going to get rich, right? But the most important thing that I really want to point out on this one, Jeff, is that you're fighting triggers on your largest chart. You're fighting that momentum to the downside. And I don't know if you were sitting around waiting for a counter trend trade going, man, everything's going down. I just want it to go up. Maybe you forgot that it was futures for a second. But this right here is a 100% with everything, right? Cool. Looking at the pivot, waited for the trend to reverse. So the trend reverses. So that's good. That right there gives me some great information, right? Opens it up for a conversation. Jeff, do you see how this is the effortless, painless from 67.35 all the way down to 67.06, over $300 of profit with every indicator on every chart agreeing for the trade? That's the easy one, right? If this pivot from nowhere is going to be a trend changer, your large triggers are going to roll and your synthetics are going to roll. And you just haven't done that yet, and you really haven't done it yet here. This is kind of just, it's hoping to be first. It's hoping to catch that reversal. And a lot of people love the reversal because they're like, man, I get to be first. This is amazing. Jeff, what I'm going to talk about a lot today and what I'm going to hopefully help you with, no worries, is making it easy, keeping it simple, going with the trend. The cool thing is we don't have to anticipate reversals because the easy money comes before those reversals come. When the trend is strong, when the triggers are strong, when everything agrees, it really makes for an easy trade. This right here is a little bit of hope. Like this is going, I hope that smallest momentum indicator on my smallest chart that's fighting everything becomes a long trade. And in this case, it works out. That's the market trying to teach you to break your rules. There just isn't a long trade that I can think of any rules for right here. Does that make sense? And I'm not saying that it's not a trade for you one day. That may be like your favorite look. Yeah. But if you'll do me a favor and just write on your chart, say, hey, Mark, this is why I did what I did. Am I reading it the way I think I'm reading it? Because you may be reading it perfectly. So the more information you give me, the easier it becomes for me to help. Cool. Thanks, Jeff. I like that you're looking, though, and I like that you're posting. So don't abandon that. And that's the one that I kind of put in there, right? There's your perfect short. That's the beautiful one. That's the one that has momentum and a clear path. And then these three divergences, these are what gave you an exit condition, and we'll talk about those. So great work this morning, Jeff. Thank you for being active in the room. It really does. It makes a difference. Guys, the more you post, the quicker you're going to get to where you want to be. Before we get going too much, can you believe it? This last day of May, we're at the tail end, about to head into June. Time to get a little summertime. Hopefully all you guys up north have thawed out, looking at sunshine. Guys, every morning I go to forexfactory.com. It's really important to me that I don't trade into news. And I'm not really concerned with what the news is. Like I don't wake up and go, oh my gosh, Chicago PMI. I'm so worried about it. Or, ooh, there's that JOLTS job opening. I've been stressing over JOLTS forever. What I'm really looking at is the reaction that's anticipated from it. There's high impact, there's medium impact, and there's low impact. And for me, really, every impact has an impact. But it's these high and mediums that are really market movers. And then, guys, if you are a crude oil trader, you'll notice that crude oil inventories, because of the holiday, is tomorrow, not today. A little bit of change there. So 10:30 or 11 a.m. tomorrow, those crude oil inventories are coming in. Normally, we see them at 10:30 on a Wednesday. So today we've got a 10 a.m., a JOLTS job opening. Member Harker is speaking at 12:30 right after class, guys. Put notes on a piece of paper. If you're curious about what it means, click on the little file box. But the reality is we're just avoiding reactions here. Somebody might say something that makes the market go nuts, makes it go side, just bouncing, unpredictable. Or not even unpredictable, but at least too fast to be tradable. Not enough time to do your analysis. So make sure that you're doing that every morning, giving yourself the advantage of knowing when that market may react a little crazy. And then I'm heading over to the education page. Guys, this is where everything that I talk about comes from. And I want to talk about the path before we start talking about the education, before we get into the rules and all this good stuff. I say this pretty much every day, probably 10 times a day. to be honest with you. But it bears repeating, especially if you're brand new. If you're learning the software, if you're looking for your trade, if you're working on your chart reads, if there's a concept that you need some help with, guys, it all starts with posting your trades in class. This is the first part in getting to where you want to be as a trader, becoming confident, right? Confidence is great. Confidence comes from the memory of success. Um, Guys, post your trades in class. Annotate those charts, the conversation that we just had at the beginning of class. Make sure that every time you take a trade, you're telling me why you did what you did. Guys, when you've been in my classroom for 3 months, 4 months, I start to know what it is you're doing. I start to get these, and I'll talk about what you're doing for the sake of the class. But until you're comfortable, right? Until you're profitable, until you're consistent, do me a favor and tell me, why did you do what you did? Write your rules on the chart, and if you write your rules on the chart, guys, I'm going to help to hold you accountable for what it is you're telling me you're looking for. Tell me how you felt. Have you ever gotten out of a trade and was like, oh my gosh, I thought I was going to throw up? And then look at the chart and go, holy smokes, I broke all my rules. Guys, there's a correlation. Feeling very calm in a trade, again, really goes with those rules, and it helps. And guys, the second half is using a spreadsheet. And there's 2 pages on the spreadsheet that Nexgen gives you. Whoops, document recovery. Guys, your first page is your trade journal. Every time you take a trade, put it in your spreadsheet. This is what I did, guys. This spreadsheet's amazing. It lets you go through the days, right? Put the day that you did it. There's drop-down menus. What kind of trade was it? Well, was it a trend trade? Was it a 50-50? Was it HVA? Or did I just have no rules at all, and did I hope? You can put a picture, those pictures that you present in class. Every time you take a trade on simulator, put it in here. Talk about how you felt, the type it was. What were your looks, right? Did you win? Did you lose? And any notes that may be important there, guys. The notes part changed my trading dramatically, because what I found is that I was writing the phrase trading into a termination condition an awful lot. This spreadsheet is going to help you recognize some patterns in the market making you successful, the conditions that go with that success. And remember, confidence comes from the memory of success. These notes are going to help you recognize patterns in yourself. I tend to trade into termination conditions. I tend to go counter trend because I hope areas hold. And guys, if you take a little bit of time each and every day, and it's a 3 to 4 minute study, to be honest with you. Study the previous day's trades. What worked, right? Write it down. This worked great. Having momentum and a clear path in this entry area, gosh, it was easy, right? It kept me relaxed. I felt good about everything that I did when I took this trade. And then what didn't work? Trading into termination conditions, right? Maybe going counter trend, fighting the large chart trigger strength. Did it feel forced? Did it make you nervous? Did you take trades because you were bored because there was too big of a gap in between your rules being met? But a brief historical study each morning is going to prepare you for the day. You're going to look at what you did well and commit to repeating it. You're going to look at where maybe you made mistakes or tried to force things and commit to omitting it. And then the second page of your spreadsheet, guys, and remember that this is in your Nexgen study picks. This is made available the second you downloaded software. This is my personal trade setup looks in the favorite looks section, guys. And I personally have about 211, 212 pictures of a rules-based entry. 212 pictures where I was able to put it up against a checklist to make sure that I'm following my rules. Every time my rules are met, every time your rules are met, I may steal your picture as well. I put it into my spreadsheet. I come back and I study these every now and then. I may do it randomly. I may wake up and say, you know what? I'm going to take a look at 5 trades off my chart. And what do they look like? Well, you know, they look like momentum and good tops or bottoms, and here's my entry. And I'm going to try and repeat that for the day. Every great entry, guys, has an opportunity for management as you grow your plan, as you grow with the software. You're going to begin to recognize patterns over and over. You're going to recognize that when the triggers and price tend to separate rapidly, they come back together. You're going to begin to recognize termination conditions, guys. Fill your spreadsheet with as many pictures as you can. I can tell you right now, if you commit to 15 pictures a day, that's 300 pictures a month, guys. That's 900 pictures over the course of about 90 days of study. The person that takes the most pictures really gets to where they want to be the fastest. It's been proven over and over, guys. So post your trades in class, track your real-time performance in the spreadsheet, and then, guys, this is what we're going to do together. This is on you. This is you making the decision that you want to be a day trader. This is me laying out the path for you. You have to make a decision to follow it or to not follow it. Learn the trigger lines and the rules for when it's okay to trade. Guys, if you don't know what your rules look like visually, if you don't know your rules, how are you going to be consistent, guys? So we're going to start off today and we're going to talk about a high probability trend trade. We're going to talk about a trade where everything on every chart agrees. And it creates an effortless trade. It creates a confidence-inspiring trade. But most importantly, it's a high probability trade. And when the rules are met, it's a trade that typically wins 70 to 80% of the time. And guys, that's a great feeling. Once again, confidence coming through the memory of success, right? Simulate your trades daily. Don't wait until you think you have it perfect. And then post those pictures in class until you're sure that you have the correct rules. Because your rules should be proven to win more than they lose. Your rules should provide a statistical advantage. So if you're sure that you have the right rules, then you're sure that you have that statistical advantage. And if you're practicing the wrong trades, if you're breaking rules because you're bored, you're creating muscle memory to go against the path to success, guys. Simplify. 2 trades in your plan. So guys, I want you to ask yourself, am I successful right now? Is my Apex account funded, right? Am I winning more than I'm losing? Do all of my trades look the same? Guys, if you're answering no to those questions, simplify. We're going to talk about a trade with only 3 rules, 2 charts. There's no need to get fancy. There's no need to look for other things. Because success lies in simplicity, guys. You have to learn them so that they're easy. Here's 212 pictures helping me let it be easy, let it be simple. You should start working on your collection. After class, go to Market Replay. Gary did an awesome job yesterday. He went back and he replayed NASDAQ. He's building a plan, adding more stuff. And he's like, I'm going to go back and I'm going to test it. I'm going to simulate it. I'm going to use that Market Replay. And the idea isn't to get simulator rich on replay because you have an idea of what's going to happen. The idea is to see the potential, right? Go back and use that Market Replay. Hit the pause button, double check your rules, and ask yourself, is this a rules-based trade? And then look at the potential when you follow rules, guys. It's eye-opening. Fix your mistakes. Take the trades you missed. Skip the trades that you shouldn't have taken. And take pictures of the correct trades. Guys, annotate those charts. Annotation isn't just for me. What you're doing is you're reinforcing these great rules. Repeat this process every day until you're always taking the correct trades. Guys, if you're always taking the correct trades, your rules for that trade should have already been proven to provide a statistical advantage, right? They should be the exact same look, the exact same conditions, the exact same entry rules. You're training your brain. Keep it simple, guys. I know some of you are brilliant. I'm an English lit major that likes to draw. I have to keep it simple, but what I can tell you is that when I do, great things happen. And then if you're always taking trades that win more than they lose, then you're probably guaranteeing yourself you can win, right? And that's when you're trading live money, guys, and not until. There's no reason in this day and age to go to live money because you say silly things like, oh, I need a skin in the game or I won't perform. That's utter malarkey. We'll go with malarkey. Guys, practice, keep it simple. Is everybody comfortable with this? Because this is what we're going to do today. We're going to keep it simple. We're going to talk about concepts that are going to help you. And really, guys, we're going to focus on a high probability trend trade when everything agrees on every chart. Why? Because it makes it effortless. Because if everything says up, why not go up, right? If everything says down, why not go down? We have that advantage with futures, guys. We can make money either direction. All we need is three things to happen. A trade is nothing more than momentum, a clear path, and an entry area. When you have these three things together, you have the advantages needed to enter a trade. You only need, write this down, you only need two charts to recognize those advantages. People love more charts, right? If two charts is good, six charts is going to be great. If I'm dividing my attention between two charts on one market, if I divide my attention between three markets and six charts or nine charts, doesn't it make sense that my life will get easier? He said sarcastically. Why, guys? Don't do that to yourself. Use a large chart. It's going to give you direction. It's going to give you momentum. It's going to identify areas, guys. It's a broad stroke of a brush. And it's going to show the overall opinion of the market, what the large crowd is thinking, right? Rules 1 and 2, your first two advantages come from the 13-2. Rule number 1 is going to make sure that you have momentum. Rule number 2 is going to make sure that you have a clear path. When you have those advantages, guys, you can take that broad stroke of a brush that happens in one bar on the 13-2 or the 34-5 or whatever large chart you're using, and you can go to your small chart and you can refine that broad stroke. You can pinpoint the area for entry. You can reduce your risk. You can increase your profit potential. And rule number 3, your rule for entry, the advantage of an entry where the market's likely to continue, comes from that smaller chart. So 3 rules, providing 3 advantages, coming to fruition on only 2 charts. Does it sound simple enough? I hope so. So we know the advantages that we need. Let's look at them, guys. And everything that I talk about comes from the education page. There are no secrets with Nexgen. True story. I'm going to give you everything you need to build a solid plan, to build a plan capable of winning more than it loses, to keep it simple, to keep it focused. It's going to be your burden to embrace simplicity. And when I click on that educational page, guys, there's all sorts of stuff. If you're curious about the indicators, right? If you're curious about the trading logic, go take a look at it. If you're curious about the trigger lines, good, because rule number 1 is a product of the trigger lines. Guys, the T3 trigger lines are your momentum indicator. They have 2 parts. They have small triggers, these solid lines. They have large triggers, these dashed lines. These work together to give you that first advantage of momentum, and it happens when they're strong. Strong triggers mean that the small are crossed up. They're above the large triggers that are also crossed up. And it's space created between the small and the large that lets me know that the odds are favorable for the market to continue up in an uptrend when your background is green, or the odds are favorable for the market to continue down when that background is red and you're in a downtrend. Guys, odds favorable momentum is synonymous with strong triggers. And you're going to hear that in class a lot. You're going to see it annotated on charts, OFM, because really we don't want to type that much. We're focusing on trades. But when they're wide, this is your best look for buying a pullback on that smaller, faster chart. And you're going to see it on the 13-2. You're going to see all of these price bars. And then every now and then, one of them seems to have a tail or a wick. Guys, this is a pullback on your smaller, faster chart. And when the momentum is its strongest, when the odds are favorable, this is where you're going to learn to enter the market. This is going to be your place where that market is most likely to continue. And it all comes from that look of odds favorable momentum. So if you commit to it, what you're going to find is that it doesn't happen all the time. And here's your rule number 1 picture, guys. Save this one. Put it into your spreadsheet. Make it your background on your computer. Odds favorable momentum is that separation of triggers, guys. When the smalls work their way inside of the large, we call this a weakening of the large triggers. And notice how the words correspond with the likelihood of the market to continue. Strong triggers means that the market's likely to continue in the direction of the trend, and sure enough, it does. Weak triggers lets me know that anything can happen up or down. And you'll notice that these weak triggers seem to be a precursor for a market reversal. Certainly not guaranteed, but you've lost the advantage of momentum. The market may do whatever the market does, right? So you're going to have to be patient. It may be weak. You're sitting on your hands. You get a reversal. There's that odds favorable. You're going to look to make money on the pullback to that next key area. Anything can happen triggers once again. Sitting on your hands, not forfeiting that advantage of momentum. Odds favorable momentum. There's that push, that continuation. And you're going to see it throughout the day, but you're not going to see it 100% of the time. Sometimes you're going to see trigger lines that don't agree. One is green, one is red. How easy is that? Don't worry about the technology behind it if they don't agree. If these are down and these are up, you don't have the advantage of momentum, right? If your background is green, we're in an uptrend, but your trigger lines are red, we don't have agreement. They need to be wide and angled in the direction of the trend. Guys, this is where new users, this is where old people that have been doing this forever try to predict what the market is going to do. I think it's going to go up because it's green, even though the triggers are red. Or I think it's going to go down because the triggers are red, even though the background is green. Everything's color-coded to help you out, guys. How many trades can you try without the advantage until you get run over so much you're tired of it and ultimately miss the best of the best? So we're going to focus on that advantage of momentum, guys. It's going to get things going. It's going to set the tone. If every trade you take starts with momentum, it's going to make your life easier. Do me a favor. Give me a Y in the room, especially newer users. Is everybody comfortable with this concept? Strong triggers leads the way, provides the advantage of momentum. This is what you're looking for to get things moving. Awesome. Once we have that momentum, guys, when the market is likely to continue in the direction of the trend, remember, this is a large chart idea. We're going to make sure that there's nothing in the way. Going to make sure that there's no termination conditions present. So once again, I'm just going to come to the educational material and I'm going to click on Fibonacci tops and bottoms, termination areas. And what is a termination area? Well, termination condition is really nothing more than an area that may reverse the market. It might stop it cold in its tracks. It might create a bounce. And the areas that may stop the market can be these divergence highs, the magenta line that prints from a pivot when there's a loss of momentum. It could be a divergence low. This divergence line that prints from a pivot where there is a loss of momentum. It can be red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1 dots. In some cases, it could be a mid-band if the large triggers remain too far away at the time of impact. So guys, this is kind of your roadmap, especially if you're brand new. Just what are you looking at, right? What are the areas that I need to be aware of to make sure I have the advantage of a clear path? And we're going to take a look, and I want you guys to keep it simple, okay? We're going to talk about the recipe for a termination condition. It's a two-part recipe, because remember, English Lit major, guys. I'm a daydreamer. Whoops, they just kicked me out. I'm going to get back in there. I'm going to talk to you from the great beyond. Here I come. Get back into that educational room. Sorry about that. Sometimes, whoops, that's not what I wanted. Sometimes the market, or sometimes Discord likes to remind me who's boss. There we go. Everybody back up. We're good. Termination conditions. Let's keep it simple. Once again, I'm going to type this out in the room. I'm going to encourage you to write it down on a piece of paper, guys. The first thing that happens in order to decide whether or not an area is likely to stop the market, whether the market is at an area that may reverse it, is price reaches an area. One of those lines that we just talked about, fibs, mid bands, 1-to-1s, you know. Price reaches an area. Those dynamic Renko bars come down and price smacks right into Fibonacci support. This is the first part of the equation. And it relies on the Renko price bars, and it relies on the areas. And then the second part, and this is all you need to make a decision. Where are the triggers? If price reaches an area and absolutely none of the trigger lines break through, don't take any more trend trade short on the small charts. You've reached an area that may stop the market. Termination conditions are true. So guys, before we go through a bunch of pictures, I'm going to ask, and this is important for you new people. I can tell you this tends to be the Achilles heel for a lot of new traders. Is everybody good with that? Price reaches an area, meaning the dynamic Renko bars come in contact with support, resistance, one-to-ones, divergence highs, divergence lows. And if none of your triggers break through, it's a termination condition. Everybody's all right with that? I have a lot of pictures, guys. I absolutely love pictures. So let's talk about when termination conditions are true. And I even wrote the recipe for you. Price reaches an area, triggers remain below. This is when we're determining highs. Here is a pivot with divergence, meaning that there is a loss of momentum. Guys, this is not a termination condition. Why not? Because price hadn't reached the area, right? This hasn't printed. It's just a pivot. There's a slowdown. When price comes back to that area, all the trigger lines remain below. Now it's a termination condition. Now it's an area that may reverse the market. You guys see how none of the triggers break? Price has reached it, and then it pushes. There's your reversal. That's what we call a strong top. A termination condition that creates a full reversal is a strong top. Here it is again. Price reaches resistance. None of the trigger lines are capable of breaking through. Guys, this is the termination condition. It's not a strong top or a good top yet because there hasn't been a full reversal. And then once again, price reaches these one-to-ones. All of your trigger lines remain below. This is your indication. Don't go long into that area. It may reverse the market, guys. Embrace this. There will be times when areas break. But as a brand new user, embracing simplicity, just stick to the recipe, right? Price reaches the area. Absolutely no trigger lines break. It is a termination condition. When a termination condition creates a full reversal, you have what's called a strong bottom. This is your anchor for the highest probability trend trade we teach. Price reaches support. Absolutely no trigger lines break. Here's that pivot that isn't a termination condition. Here's price reaching that pivot. All of the trigger lines remaining above. Now it's a termination condition. So guys, here's pictures from highs, from lows. This is one of those instances where I would steal these. I would put them into my spreadsheet. I would make sure that I'm comfortable with the look. And this is how we recognize a termination condition, an area where the market is likely to reverse, has the potential to bounce. It really is just a great way for you to give your money away by trading into these. So when is it clear? When do we have that advantage of a clear path? And I'm going to write this in the room as well. When both your small and large triggers get to the other side of an area, we consider the area broken. We now have a clear path. All triggers are below the Fibonacci area. The path is clear. Rule number 2 has been met. We now have the advantage of a clear path. All the triggers above the area. Rule number 2 has been met. We now have the advantage of a clear path. Pretty simple, right, guys? It's either going to break or it's not. Either price reaches it, nothing goes through, we're going to sit on our hands. Both triggers break through, now we have a clear path, right? No clear path. Clear path. There's one of those tails for entry. Guys, there's going to be another look that you're going to have to become comfortable with. Because when you have those strong triggers, that odds favorable momentum, there's going to be an instance where these areas break. If they didn't, we'd be playing pong in between two areas all day, right? We're going to talk about what we call a 50-50 look, guys. And it's not 50-50 in the sense that I might win, I might not. It's 50-50 in the idea, the visual, that your small triggers have broken through an area with odds favorable momentum, but your large triggers are lagging behind. When you have this 50-50 look, this is an area with the potential to break because of the momentum, but it isn't broken yet. Remember, it's not broken until both the small and the large get to the other side. So areas with the potential to break are not a clear path. Rule number 2 hasn't been met. But this will be, for a lot of you, your first medium probability trade. That first trade where all of your indicators don't agree and a small issue, excuse me, a small issue exists. This area that hasn't broken will be the first issue that a lot of you embrace, guys. And when you're looking for trades in areas that haven't broken, I'm going to ask you, let everything else be perfect. Don't sacrifice any other advantages when you're sacrificing the one of a clear path. Because remember, a trade takes 3 things to be high probability: momentum from the strong triggers and a clear path gauged by the areas versus the triggers. So guys, that 50-50 look, not a high probability trend trade. These are going to have to be managed assertively. You're going to have to identify problem areas. You're going to want to get to zero risk as soon as possible. So do me a favor, guys. Give me a Y in the room. Let me know that I'm not just talking to myself right now. Price reaches an area, no triggers, no trade, right? Pretty easy. Both triggers get to the other side, go man go. You've got a clear path. Smalls break, large don't. Has to have odds favorable momentum. Guys, that's a maybe, right? It's an area with the potential to break. Cool. So we've got our first 2 in place. We're using those areas. We're making decisions. There's going to be a time where the market turns from nowhere, right? Where you have that clear path, where you have that momentum. But there's one more termination condition that you can identify on a smaller, faster chart. And this is going to show you change before it actually happens on that 13.2. And it's 3 divergences in the same price range, guys. This may terminate the trend. Notice that I use the word may. This is not a guaranteed trend. You still want to wait for those advantages. You're not just going to jump in. But 3 divergences is 3 losses of momentum. When the market loses momentum 3 times on that smaller, faster chart, it may terminate the trend. It becomes even more powerful when your small triggers work their way inside of the large. Remember that anything can happen look? Visually, we're seeing a loss of momentum in the trigger lines. Visually, you're seeing a loss of momentum through 3 divergences. Guys, it becomes even more powerful still when that 3rd divergence is higher than the 2nd. It means that price couldn't take out the previous pivot and we're losing momentum, right? So you'll see this look from a low. You'll see this look from a high. When maybe your 13.2 looks like this. From the low, it doesn't appear to have anything in the way, right? And it's looking pretty good. Or maybe here it has odds favorable momentum and nothing in the way. And then Jeff, I'm going to use your picture real quick to kind of help illustrate that. Jeff posted a great picture this morning. Let's see, and his doesn't want to open. Where the market had odds favorable momentum, where the market was going down, right? But then we see those 3 divergences, weak triggers. And this was your precursor, even with the odds favorable momentum, even with the clear path, that market may push up higher. It's never guaranteed, but if nothing else, it gave an opportunity to maybe manage out of that absolutely perfect short. So guys, using the 13.2 for termination conditions initially. Strong tops and bottoms are the precursor for that best look, for that highest probability trend trade. When a termination condition creates a full reversal, that full reversal gives you odds favorable momentum and a clear path. You're going to look for that entry for the highest probability trend trade. And guys, this is it. Notice that when we talk about strong tops or bottoms, and I've got some great pictures for that. Thank you, Safia. It has to be a termination condition that creates a full reversal. When we talk about a strong top or bottom, a termination condition creates a full reversal. A 50-50 doesn't create a full reversal for a strong top or bottom, and a clear path creating a reversal doesn't form a top or bottom. It has to be a no triggers through scenario. I've got some great pictures to help you guys with that today. So we have 2/3 of the equation, guys. We're only using one chart so far. We're using that large chart. We have the advantage of momentum through strong triggers. You have the advantage of a clear path, right? Of a market that is not only likely to continue because of the momentum, but it has absolutely nothing in its way. So now we're going to go to that smaller chart. And guys, we're going to pinpoint where the market is likely to continue. And you're going to be able to do that with such accuracy that you're going to use a limit order to buy or sell a pullback in an area inside a favorable large triggers. And I like the verbiage on that. And when you annotate your charts, I love to see you guys write that because it reminds you exactly what you're looking for. You're looking for a pullback, a small retracement in price that's counter to the underlying trend. And you want it to be at an area inside of favorable large triggers, guys. And favorable large triggers, when you look at your small chart, is defined as both the large, the ones that are native to the 5-1 or your 13-2 or whatever small chart you're using, and your synthetic triggers, which are taken from your large chart, when they trend one on top of the other, guys, when they are like two snakes running down the road side by side, this is going to create your smallest window of opportunity. This is going to reduce your risk the most. This is going to give you that best chance for more profit potential. But guys, committing to the favorable large triggers is going to create a very definite advantage as you look for your entries. In your entries, remember, they come from a smaller, faster chart. If you're trading crude oil or the S&P, it's going to be your 5-1. If you're trading the NASDAQ, if you've got one of those new workspaces John gave us, it's actually going to be a 13-2, and your larger chart's going to be a 34-5. The patterns that I'm teaching are going to work on any time frame. They're going to work on any market. Put your Tesla stock. Maybe you work for Apple Computers and you want to use Fibonacci to know where the highs and lows have the potential to be. It even works on stocks. I've seen it used on cryptocurrencies. All we're doing is recognizing patterns. And we're going to use that 5-1 when the rules are met on the 13-2 or your large chart. Small chart's going to look like this, guys. If we're in an uptrend, we have odds favorable, there's nothing in the way. Your 5-1 should mirror that look. All charts should agree. You should have strong triggers on the 5-1. You should have nothing but up bars, right? Your large trigger should be wide, one on top of the other, angled in the direction of the trend. You're going to watch and you're making the decision. I'm going to enter the trade if my conditions are met, guys. And your rules say that you're going to use a limit order. We're going to pinpoint. So we can wait for the market to come back to us. We're going to use a limit order to buy or sell a pullback. And a pullback is a small retracement in price, means the market has to go down in an uptrend or it has to go up in a downtrend. And that pullback begins with a reversal bar. Everything says up, everything is strong, everything's moving in the direction of the trend. And guys, you're going to wait for them to say, hey, I'm going to fight it. Your small crowd is going to fight momentum. Your small crowd is going to fight direction. Guys, your small crowd is going to fight everything that the large crowd says. And thank goodness, because it's going to let you reduce risk and maximize profit potential. So at the time of this reversal bar, your job is to create a window of opportunity. And the window of opportunity is just a fancy way of saying where the market is likely to continue, where that trend is most likely to continue because of the advantages on the 13-2. In a long trade, your window of opportunity will go from the highest point of support to the lowest point of support inside of favorable large triggers, and your job will be to activate a limit order right at the top of that window. For a short trade, it'll go from your lowest point of resistance to your highest point of resistance, and your job will be to activate a limit order right at the bottom of that window, right below that lowest point of resistance inside of favorable large triggers. Your limit order is waiting, your triggers are strong, they're favorable, and it becomes a waiting game. Is the market going to come back for you? Sometimes it will, sometimes it won't. Remember that it is a smaller, faster chart. Don't get caught up on ticks because they're going to fluctuate as the market pulls back to that best of the best area. Your limit order is waiting at 79.21 at the top end of that window. And if the price comes back, it's going to fill that order, hopefully, and you're in a long position. Guys, this is your spot where the market is most likely to continue. It is your spot that has been defined after, whoops, that's not the picture I wanted. You've defined this area using 3 rules, right? Strong triggers, clear path, entry area. This is what we've just done because of the momentum's present. The trade equation has been fulfilled, guys. You're in the trade at the top of the window because of the momentum on the 13.2, right? We don't expect that small crowd to get much of a push, so we're going to get in at that first potential bounce point. But our protective stop is going to go below the 1-to-1s, below the large triggers, outside of that window of opportunity where the market shouldn't go. And I like that phrase, where the market shouldn't go. Because what it does is it says if the market extends beyond that window of opportunity, I no longer want to be in the trade. Guys, your highest probability trend trade is a trade that typically wins 70 to 80% of the time. It's a trade that I take 1,000% of the time because 70 to 80% of the time, this is my result. Profit target reached. My initial stop's below that window of opportunity, but once the market begins to move, I'll reduce it below a reversal bar because I waited for the pullback to that best of the best area. Guys, areas inside of favorable large triggers are like throwing a tennis ball up against a wall. It gives the market a place to bounce. Because I waited for that pullback, the room I have to my next key Fibonacci area has grown exponentially. So has my ability to create profits. And guys, this is your best of the best. This is what it should be to get you in the market. And I always encourage people, embrace it. Either your rules are met or your rules aren't met. Everything else means you're sitting on your hand. Guys, you're going to be reading your charts. You're going to use this plan. You're going to use these rules. You're going to identify these advantages. And you're going to understand where the market is likely to continue. And that continuation point is your entry area. You're going to understand where the market is likely to stop. Those places where the market is likely to stop is rule number 2. They're going to determine whether or not you have a clear path. And you're also going to be able to understand where the market is likely to go. And you're going to use that momentum and that clear path. And it's going to help you make decisions on profit targets. But your first 20 days has to be getting in at the best of the best spot, recognizing the advantages and getting that entry, guys. And I always tell people, if you can take 20 days, mechanical, methodical, focus on nothing but entries, it's going to set you up for success. You're going to be taking a trade that's been proven to win more than it loses. Most of you, when you talk to your salesman, I'm not a salesman. I can't stress that enough. But most people say if they could make $250 to $400 a day per contract, they would be happy. And let's go low end of that, guys. I'm going to show you how using a very simple plan, you have the potential to make an easy $500. Every day you trade, couple hours in the market, right? But you have to be clear. You have to be concise. You have to know your rules. You have to post in the room. Let's make sure that you can follow them. Because, guys, let the math be simple. $500 a day is a $2,000 week. That's not a horrible week. Most people wish they could make $8,000 a month, right? And guys, there's not a lot of people in the United States that are making $96,000 a year. From 3 rules on 2 charts, 3 advantages pieced together to give you the highest probability trend trade. And this is what it looks like when it works in symphony, guys. On the 13.2, when you have those strong triggers, when there's nothing in the way, you're looking for the pullback, but you look on the 5-1. If I circle this tail after the fact on my 13.2, look how that circle shows up on the 5-1 at that area inside of favorable large triggers. All you need to do is take 20 days, guys. Study this look, right? Study these rules. We're not trading tails, though. We're trading pullbacks on the 5-1 chart. They just happen to be the tails on the 13-2. We're not trying to predict on that large chart where the tail is going to happen. We have the advantage of a small chart to refine it. And guys, if you go through and you start looking at these, and you have odds favorable and a clear path, circle a tail. Sometimes it's a trade, sometimes it's not, but this becomes a great way for you to determine if your rules are met. Guys, look at that. That's odds favorable momentum. There's absolutely nothing in the way. And what did that look like on a smaller, faster chart? I have an idea. It looks like a pullback to an area of support inside of favorable large triggers. Guys, if you're a NASDAQ trader, if you have that chart up, or even if you're not, give me a Y in the room if you can see it. Rule number 1 is met with the odds favorable momentum, right? Absolutely no question about it. Small's away from the large are wide, they're angled in the direction of the trend, guys. You have rule number 1 met. Annotate your chart. I have odds favorable momentum, right? Price has not reached an area. All of my trigger lines are above the previous areas. Write it on your chart. I have a clear path. No termination conditions. And then reinforce what you're looking for in an entry. I have a mid band inside the favorable large triggers. Guys, you've identified where the market is likely to stop through termination conditions. You've identified where it's likely to continue. And then look at this. You can use Fibonacci to determine where it's likely to go. Guys, this is your highest probability trend trade. This is your best of the best. This is the one that's going to get you where you want to be. And if you can focus on nothing more than this, guys, you have a plan that's been proven to win more than it loses. Your job is to upload it to Screencast. To take that picture, get it in the room and say, hey, Mark, am I reading this right? Because I feel like it was a high probability trend trade. After we talk about it, your job is to open up your spreadsheet, right? Put the trade that you took into your live tracking sheet. Talk about what was happening. It was a trend trade. How did I feel? I was confident because all of my rules were met. I'm coming from a termination condition that creates a full reversal. I have a strong top or bottom. I had odds favorable momentum. My 5-1 chart was strong as it could be. And I did nothing but win. Right? I won on my first target. I won on my second target. And I'm going to use that capped button. I'm going to call it rules met because I want to come back. I want to study this tomorrow and I want to make sure that I do it again. And it was such a pretty trade that I'm going to put it into my spreadsheet. There's my best of the best, guys. Awesome. Write your rules on it, Conrad. Can't stress that enough, man. Arrows are pretty. Write your rules on it. It's not for me. It's for you. Guys, if you write your rules out every time you take a trade and you keep finding success with that trade, aren't you going to begin to trust your rules, right? Aren't you going to begin to believe that this is the look? Guys, if you entered the market, and we'll just call it at 69, and it goes all the way up to 92, guys, that's 27 points. 27 points at 5 points each. 5, 3. Oh my gosh, that's math. That's a lot of money. Guys, there's your daily goal on a 2-lot, 1 trade. Shut it down. It's 9:53 a.m. You're done. Go play golf. Come back and fight again tomorrow, or keep looking for the rules to be met, right? Keep looking for odds favorable momentum. Keep looking for no termination conditions. Keep looking for a pullback to resistance inside of favorable large triggers. and give yourself those advantages. Ron, how was flounder fishing yesterday? Good stuff? Look at this, guys. It's a termination condition, right? Price reaches resistance. Absolutely no trigger lines break through. That market's probably not going up anymore. You knew not to look for a long trade. Caught limit. Very nice. This termination condition, guys, is pushing us to a clear path. It's pushing us with odds favorable momentum. And look at where the market came back to, guys, live in front of your eyes. There's a pullback to an area inside of favorable large triggers. And if you're in at 85, guys, you've probably already reached your first profit target. You're probably already break even. And you're waiting to see if that market continues to move down to the next key Fibonacci area with absolutely nothing to lose. Guys, your job is to just recognize these advantages. Your job is to embrace these advantages. I'm going to give you right now in the room a high probability trend trade checklist. Every time you take a trade, check it out. Notice that there's only 5 things on here. 4 things, sorry. No good at math. Guys, and it starts with, is the market coming from a good top or bottom? And if you're not sure what that means, there's a video. But I've also got some great pictures for you today. Did you have odds favorable momentum on both charts? Were your termination conditions not true? Did you have that clear path? And did you have an area inside? Guys, if you can check yes to each and every one of these, you're looking at a trade that typically wins 70 to 80% of the time. Why on earth are you looking for something else? I've also taken these exact same rules, guys, and I've put them on another one. And I've taken that checklist and I've stolen pictures from the resource materials. This is a great one for the computer. Keep it on there. Study it each morning. Remind yourself what you're looking for. And then take the other one and print it out, right? If you don't have a printer, go to Kinko's. Print out 20 of them. And every time you take a trade, use a pen, use a crayon. Prick your finger, dap it in blood, whatever you have to do. Make sure that you're hitting yes and getting those advantages. And then, guys, finally, you need a plan, right? You need a plan of attack. Here's your plan of attack, and it revolves 100% around entries first. Learning to day trade is like eating an elephant, guys, and the only way to not become overwhelmed is to keep it simple. News in 5. Thank you, Jose. Keep it simple. Focus on nothing more than entries. Give yourself a couple weeks. That's all it's going to take, guys. If you're sticking to the checklist, you're going to be nailing entries inside of a couple weeks. The only thing that's going to make it difficult is your brain telling you that you need to find something else, that you need to find more. And that's where, write it in Sharpie on a piece of paper, big as you can. I only need to make $250 a contract to get rich beyond my wildest dreams. Why is that, guys? Because if you make $250 on a 1 lot, $250 on a 1 lot, guys, is $2,500 on a 10 lot, isn't it? That's $25,000 on a 100 lot. And if you're consistent, you'll probably get there one day. Don't worry about hitting a home run, guys. Base hits get you where you want to be. $250 per contract. You have the potential to do it. What you've done is you've embraced a plan that keeps you capable of winning while you look at the charts, while you learn to read them better, while you learn to manage them more efficiently, guys. There's a section on stop logic, right? Which range charts you should be using if you decide to add those in. Profit targets, a great idea. Trade management, strong trending markets, 50-50 trades, guys, when areas have the potential to break. Daily goals in your max risk, guys. This is a simple plan. You're going to write a plan like this. Keep it focused on entries, guys. Make sure that it's mechanical on an entry. Make sure that it's mechanical on your management, and just focus on repetition. $9.58. Here was your first one. Pulled right back to resistance inside of favorable large triggers, didn't it? Only 2 divergences. Third one becomes a management opportunity. Each and every day. Guys, do you have any questions? News in a minute. Do you have any questions about a high probability trend trade? Do you have any questions about momentum? Do you have any questions about termination conditions? Maybe you're trying to get better at entries. What do we see here, guys? There's a termination condition that created a full reversal. That full reversal gave odds favorable momentum. But notice that that Fibonacci area didn't break. So we have one of those 50-50 scenarios. On that 50-50 scenario, we also have multiple divergences, right? We're seeing a slowdown takes away the likelihood of success, guys. Keep it simple. If you sacrifice an area that hasn't broken, don't sacrifice on your smaller charts, guys. It's not going to be advantageous for you. This is the S&P. We'll leave it up. News is going to print. Guys, I'm going to take a minute, go reload my water, get ready for the second hour. When I come back in the second hour, we're going to look at the pictures that you guys posted. We're going to talk about advantages. We're going to talk about patterns. We're also going to talk about, I've got a short little snippet on strong top and bottom. So for you guys that are like, man, I keep thinking I see a strong top or a strong bottom, but I'm just not sure on it. I think I may have cracked the code to make it super simple for everybody. I hope, fingers crossed. I'll be back in about 5 minutes. When I get back, we will start back up, guys, and we'll start talking about patterns and looks that give advantages. Back in a few. All right, guys, I'm back. Conrad, thank you for doing that. Does it help? Does it help to write out what made you such a badass? Pardon my French. I think it does. Because now you're thinking about it, right? Now you're thinking about those advantages. You're like, why did I do this? Oh, I did this because I had every advantage on every chart. Guys, let's talk about your charts now. Safia got us going today. I'm not sure if she's still in class. That's okay, but we're going to take a look at it. And I enjoy it because Safia is starting to use yellow boxes to identify termination conditions. Pretty cool, right? So she's going through and using a visual indicator to identify when the market is below, when the market is above, and she's looking for opportunities here and there coming through. And a termination condition creates a full reversal, and a full reversal gives odds favorable momentum. And the only thing that I would have loved to have seen here is a yellow box right here because price reached resist or support and none of the trigger lines broke through. Guys, remember, if you forfeit an advantage, it's really important to not have another. When you're coming from a strong top, guys, it's a termination condition on every chart. When you have odds favorable momentum, and especially she let the market close back to the large triggers, waited for everything to agree for the trade, and then was able to capitalize. Guys, this is a phenomenal trade. It's a beautiful trade. And you'll notice that she uses a trend trade checklist. The only challenge is it is a potential termination condition here. But the market has already reacted to the termination condition. And it's already reacted to the one above. So it's a medium probability trade with beautiful execution. Nice job, Safia, if you're listening. If not, I'll tell you later. Nice job. And then Gary did a lot of study on the NASDAQ yesterday. A lot of charts. I'm going to get them all up. And we're going to take a look at them. A lot of information, so I'm going to kind of paraphrase. I like this one. Still a lot of charts, right? 34.5, 21 range, 13.2, 13 range, and an 8-2 chart. 5 charts to take a high probability trend trade. So Gary, I want to show you something. If you're in class. And I want you to see something. And this is pretty cool, guys. And I'm going to stop right here. So I'm going to take 3 charts of your 5. And then I'm going to make a selection. And I'm going to slide this over to the 13 to your big chart. So now I'm looking at a big chart and I'm looking at a small chart. So I've taken 5 charts and I've whittled it down, guys. And here I have a termination condition, a mid-band, large triggers, everything terminates. The market reverses. The market gives me odds favorable momentum. Then the market gives me a strong trigger pullback to the area of support inside of favorable large triggers. Guys, give me a Y in the room if you see. It's a rules-based trade, isn't it? And it's a beautiful trade. And the charts agree and the momentum is there. And look at all that room to the next target. Guys, look at the difference between this right here, simplicity, focused. Did I need, and Gary, I'm not beating you up, did I need a 21 range to take that trade? Did I need a 13 range to confirm the 21 range to confirm the 34.5? And did I need an 8.2? And how does that correspond? Gary, you do you. But this exact same trade could have been taken successfully with only 2 charts. And there it goes, guys. All that momentum from a termination that creates a full reversal takes you all the way up to that key Fibonacci area. Beautiful trade, Gary. This one doesn't even have a 34.5, so you've omitted your largest chart. You don't have areas inside of favorable large triggers. You have weakened triggers. becomes a little challenging, doesn't it? You're on the wrong side of everything. So I'm not entirely sure what this trade is. But it has the same checklist that this one had, doesn't it? But it looks very different. And then again, doesn't make it to the area, didn't get a market flow signal. I'm not sure what your 34.5 is saying. You're below everything with multiple divergences. The smalls are coming against. It's difficult for me to know why you did what you did because you don't appear to be working with a large chart. And now the large chart comes back in, right? Termination condition right into a fib. None of the trigger lines have broken through. Reversal bars from the outer band. Divergence. Didn't wait for the area, which is okay because I'm sure your stop got you where you needed to be. Dun, dun, dun. And you took it because of the confirmation, but the confirmation wasn't from an area inside of favorable large triggers. And guys, that's where the market's going to trick you, right? The market's going to say, here we go. And then it comes right back to that best entry. And then this one, we brought the 34 back into play. You take the termination for the full reversal with the small breaking through. When all charts agree, you take a pullback to the area. Once again, you're watching ticks and getting in. Afraid the market's going to go without you, and it comes right back to the best of the best area. Nice exit. I like it. Gary, you were busy. And busy is good. And then there's a bad bottom directly into a termination condition. Not even a 50-50, right, Gary? Smalls didn't break. Therefore, it's a termination condition, even without divergence. And that's the result of trading into that termination condition. So, Gary, thank you for sharing. Great job on replay, guys. He did all of this last night to go through. Remember that it's not my job to tell you how to trade. It's my job to point out advantages and disadvantages. It's my job to make sure that you understand when they're present, when they're not. And it's your job to be honest with yourself, right? Termination conditions on the large chart, those small triggers didn't break. They almost did. There's 1 foot through the door, but they never made it. And those large triggers were a full bar away. Large chart, small chart, Gary. That's it. Large chart, small chart. Termination conditions come from the large chart, which means that 50-50s are identified on the large chart, right? Not the small chart. This is just an entry chart. That's all it is. It's taking the information off of your large chart. And let's do this again. Let me open this one up. And just for clarity, I have to make it smaller again. So once again, if we're just using 2 charts, right? 2 charts for simplicity. I'm going to take your smaller chart, the 13.2 on the NASDAQ, and I'm going to move it over next to your 34.5, which is your large chart. Doesn't matter what the numbers are, right? It's just large and small. So let's take the 2 chart process. The first one is there odds favorable momentum, right? Small's above the large. The large are a little flat, but I'll give it to you. There's rule number 1. You have a little momentum. Rule number 2 says no termination conditions. And this is where this trade was a challenge. So that rule number 2 happens on a 13.2 chart. Small trigger lines don't break through that area. It just doesn't matter what color it is, but the smalls don't break through. Therefore, you're trading directly into a termination condition. In order for this to be a 50-50, the small triggers would have to be above with wide triggers, right? With odds favorable momentum. So because rule number 2 isn't met, even with an entry at an area inside of favorable large triggers, you get run over, especially as the market comes back. Gary, do you remember the gap theory? If the large triggers remain a full bar away when Fibonacci gets hit, the market's likely to come back and close that gap. So not only was it a term, but it was also the gap theory. So it was kind of a double whammy there. And this is a trade that really just didn't have any chance with a clear path. It just wasn't there. Notice that your trigger lines are split. And look at how flat and lifeless those large triggers are. So great practice. So I would go back and annotate. But once again, I would say, did you notice how you could get the exact same information on 2 charts? And maybe, just maybe, because I know how my brain works, you saw this range chart say up. So it influenced a little bit, right? You saw this one with a little momentum, and maybe it influenced a little bit. Because I know my own personal body, my brain, if I give myself another chart to look at, I will embrace that chart. And I'll say to myself, man, if I can find a reason here to ignore a reason why I shouldn't, I'm going to use it, right? And if I can find a reason here to ignore a reason why I shouldn't, I love simplicity, guys. I can't force you to be simple, but I can say that if you're struggling, if you feel like you're spinning your wheels a little bit, simplicity may be a great path. This checklist came from a conversation with a gentleman that was chasing everything. And once he went back to this checklist, once he kept it simple, and it was a plan more like this: a high probability trend trade and a 50-50 trade, guys. And that was his whole plan. And he went from inconsistency, not making money, to being consistent and making money. I know that there was a gentleman in the room earlier this week, or maybe last week, that funded 5 accounts by taking a deep breath, stepping back, and embracing simplicity. And I see it every day, guys. I see people chasing everything. And then when they don't catch it, when they can't get it, when it doesn't seem to be working, eventually they get so tired and exhausted from doing it that they go back to looking for the best of the best. Jeff posted this chart, and I like this chart a lot. And guys, this really reinforces why writing rules on the charts creates an advantage. And I like this because he's looking, right? Looking for a potential long. If I write my rules on the chart, what it does is it dissuades me from taking that one. Either rules not met or they are. Do I have odds favorable momentum? Yes, but down. No termination conditions? Yes, below me, right? Trend is down. Momentum is down. These are the charts, guys, where when you post them, when you had an area inside favorable large triggers, these are the charts where I'm going to ask you, I see that you were looking for the long. What kept you out of the short? And probably because he hadn't opened up yet, right? He hadn't gotten into it. He opened the charts and made a really quick read. When you make those really quick reads, guys, it's even more important to type your rules on the chart, because your brain says, get in, I think I missed something. Go, 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 go. And then the logical side of your brain goes, whoa, but Mark, the trend was against you. The momentum was against you, right? The areas were against you. That looks a lot like one of those shorts that I see in class. Guys, that's a perfect high probability trend trade to the short side. Not a long trade. But we never get to have that conversation if you don't post in the room. So keep posting those charts, guys. And it doesn't matter if you win. It doesn't matter if you lose. It doesn't matter if you're reading it right or you're reading it wrong. We'll talk about it. Gary, termination, creating that full reversal right into a termination condition. So your 21.3 on the S&P is at a termination condition, but your 5.1 is losing momentum, but you're working on a clear path, not quite there. You're at the outer bands, and you're waiting for a pullback and divergence if it prints. And there's no potential for divergence printing there. Do you guys know how to gauge whether or not that divergence potential is present? If you're looking at your 5.1 and you see this negative number printing, and look how it fluctuates, 647, and the market just stops. Oh, there's 606, 627. Guys, these numbers don't mean anything, but what it means is that there's the potential that the market is losing momentum right here. If the market pushes up a little bit, you'll be able to identify that loss of momentum. And that's all that is. It lets you know that it may happen. But until it prints, until that line prints, guys, it's nothing more than potential. And that's just a chart read. Good chart read, Gary. Always analyzing. If there's not a trade to take, read a chart, right? What are my charts telling me right here in the moment? Am I getting close to my rules being met? Is it almost time to take a trade? Look, Gary, we have a dead link. Let's see if we can liberate one of these words and make it work. There it is. Big chart says everything's down with a clear path. Small chart says loss of momentum on a pullback to the area inside of the favorable large triggers. So again, let's do this. I'm probably going to do this a lot with you guys. And I'm not doing it to beat up a plan. I'm doing it to maybe embrace the idea that you can take the exact same information and make a determination on only 2 charts, guys. Simple, easy. That's all it is, Jay. Is the numbers mean that there's potential divergence forming, but until that prints, right? Until it's solid and not fluctuating, until that line comes off of the pivot, it's only the potential, right? I have the potential to be 6.5, but until I actually hit 6.5, it's nothing more than potential. So 2 charts. I don't have odds favorable momentum, but I have a strong trending market, right? The market is down, it's been down, it's smashing through areas. And guys, when my small trigger lines ride the large like that, man, it's not odds favorable momentum, but it lets me know that that market is trending. I have a clear path, right? But my smalls are inside of the large. So this becomes a medium probability scenario. My issue is momentum. Guys, give me a Y if that makes sense. It's a medium probability because my issue is momentum, right? Which means that I really don't want to sacrifice a clear path, and I don't want to sacrifice an area inside of favorable large triggers. So let's see. Do I have a clear path? Heck yeah, I do. There is nothing in the way of the strong trending market. Do I have an area right there inside of those large triggers? Absolutely I do. Guys, this is a medium probability trade. This is a wonderful trade. One small issue exists, the other advantages are present. It just means that I have to manage it aggressively. It means that I need to get in, I need to reduce risk, I need to take quick profits and get to 0 loss level as quick as possible. So Gary, do you see how on only 2 charts, you can get enough information without confusion to discern. And this is kind of me just getting back to simplicity. This isn't me telling Gary that he's doing too much, because Gary knows how to read his charts, guys. I want to say that. But for those of you that are new, a lot of new people go, well, if he's got 5, I need 5. And I want to show you how you can get the exact same results typically with less. Less is more, I think Conrad said. All right, Jay Solar, great question. I'm going to come back to that. Let me get through the last of the pictures here, and then we'll talk about it 100 and see if we can't get a little clarity. All right, Ron, let's see what you did. Ron says 2 charts are plenty. Odds favorable momentum is the key. Clear path is imperative. And he'll take a little chunk out, right? $220 in 3 seconds. Easy trade, all the advantages. He's just got a different entry, right? All right, so once again, weak triggers, but a clear path. Weak triggers, but a clear path. Area inside of favorable large triggers. Once again, Gary, one of those medium probability trades, right? You know that you don't have odds favorable momentum. I'm going to pull it down to 2 charts again. Guys, I'm not opposed to range charts. This is just for the lesson of 2 charts. Gary's waiting for it because he knows the advantage. He knows it's a medium probability. Loss of momentum. Every chart agrees. Area inside of favorable large triggers. Absolute clear path. His one issue is the momentum. But with everything else there, he'll take it and he'll manage aggressively, assertively. Gary, great read. Termination condition. Termination conditions. Gary says, ha ha, you can't fool me. I'm not trading into a termination condition. Not willing to forfeit that advantage. Clear path, guys. And then once again, here's that clear path, Ron style. Everything says up, the path is clear, the market's flying. He says, you know what? I'm going to make a little money on the way. So that's $440, guys, over the course of about 5 minutes. That's not a bad way to make a living, Ron. Nicely done. Did I get that one? Oh my gosh, you just keep doing it. Odds favorable, clear path. There's that strong trending market again. Boom, boom, does it again. 210, 210, 210. Beautiful trading, Ron. Termination, bad bottom, not looking for the long because of the termination, right? Even with that odds favorable momentum, Gary, great patience. Could just as easily test support, right? So many charts. But you're right, it could come test support. Or it could rocket all the way up to the moon. We don't know. It's not our job to know, right? It's not our job to predict the market. It's our job to recognize advantages, and when they're present, follow our plan to the letter. If it says get in, get in. And we got a slow link here, Gary. So while that one tries to come in, I'm going to pull up Conrad's. Conrad says odds favorable momentum, right? No terminations, momentum is up. Watch small chart for entry. Beautiful entry. Right at the mid-band. Conrad, you can make it easier. Get John's new workspaces. You know, get John's new workspaces. What he's done is he's made this 13.2 look just like the patterns that I teach in class. areas for entry inside of favorable large triggers. And this is the one that we talked about earlier today, right? Let me show you your trade on the new workspace. That's it. Isn't that beautiful? Isn't that easier? I know. That's your trade. That's the one that you just took, I think. New workspaces, guys. Simplicity. Even John Novak knows it. Simplicity is the key. Beautiful trade, though. Nicely done, Conrad. Very nicely done. And then, Gary, did yours load up? There it is. Termination creates a full reversal. Full reversal gives odds favorable. Odds favorable gives a clear path. Clear path gives a pullback to resistance inside of favorable large triggers. And that was your money. And you said your ATM wasn't set up? Did you not have stops and targets in, Gary? Sometimes it's on sim. You ever take the perfect trade? Do you know how to add your stops and targets once you're in a trade? Do you guys know how to do that? This is a great lesson for the whole class. If you get into a trade and you find, oh my gosh, I don't have stops and targets in. So it's the same either way. This is the S&P. So let's say, hypothetically, I go short, right? Let me get rid of, so I have no stops and targets and I sell the market. And guys, I'm not saying sell the market. And I'm like, I don't have any stops. Oh my gosh, I don't have any targets. So if I sold the market, my stop has to be a buy. So I'm going to right click and I'm going to buy stop 4. Now I have stops in place. And a target has to be a buy. So I'm going to buy limit 4 just below it. Now I have a stop. Now I have a target. If it hits my target, let's see if we can make it hit our target. That's how you make the market turn the other way. If it hits my stop, it'll pull me out, and I have to cancel the other side of that trade. So if you buy, you need a sell stop, you need a sell target. If you sell, you need a buy stop, you need a buy target, but you have to cancel out that other target. Yeah, guys, that's a big one because it stinks to take a beautiful trade and bail because you don't have stops and targets. Mike M says, with odds favorable momentum and no termination conditions in an area inside of favorable large triggers, he'll take an entry. I love it. 2 contracts. You get that second divergence, right? 2 divergences and weak triggers, it may start pushing up higher. You get out of this one, break even. It just didn't work, right? It didn't give you what you wanted. In at 63, could have made $100 on that first contract. It's a great trade. It really is. It just wanted to push a little bit. One thing that is a great indication, Mike, hopefully you're with me. When that high volume area prints against you, if you are using a range bound chart or a range chart, and those smalls are returning to the large and the smalls are working inside, man, I'll usually take a contract at that HVA because it's showing me that the buyers are saying something, right? It says that I had a reversal bar and a breakout bar, and that's where they all got together to conspire against you. And it's still pretty good. It's at 53-ish. Take a little money, right? Get to break even like you did, but it's okay to get paid early. Can't stress that enough, guys. If you're in a trade with all those advantages and the advantages start to go away, smalls work inside, multiple divergences, right? Things flatten out, HVA. It's all right to get paid and go break even. It doesn't have to be hell or high water. Remember, we're doing this to make money, right? Still working on the market flow. So that's a good one with market flow, Mike. And it really doesn't require anything more than knowing that that's a potential trouble spot. And I think I have, that's not the picture. That's not the picture. I thought I had a picture. No, I don't. Just kidding. Yeah, so it'll help you identify that change a little bit, but the small chart was giving it to you as well. I think it's a perfect trade. If I get in here and I see that fib on the 8 range, right, and I've already had a reversal bar off of it, 47 is a good spot to take at least part of it, right? And then when this prints and the trend changes and I'm weak, I might take second contracts there, or at least not be willing to lose. Great trade, Mike. Nice job. All right, Jay Solar, are you with me? We're going to answer some of your questions now. And let me say, please, guys, don't ever apologize for asking questions. If you don't ask questions, I don't have a job. So keep asking everything. So what are the advantages and the disadvantages of a 50-50 trade? And you know that it means one set of triggers past the fib, but does it also mean that is a weak top or bottom? Maybe. So Jay Solar, great question. Let me answer it in 2 parts. Let's talk about tops and bottoms first, okay? I made some pictures today. I hope you guys like these. And if you see Safia, thank her for these. So Jay Solar, you're comfortable with a termination condition, right? Guys, everybody's comfortable with the termination condition. If price reaches the area and absolutely no trigger lines are through, it's a termination condition, right? And here I have quite a few examples. I have one up top here. I have one right here, and I have one right here. So everything's good there, right? And Jay, you may be trying to piece more together than you need to. So let's see if we can do this. Embrace this recipe for good tops or bottoms, right? Because it's a termination condition that creates a full reversal. So Jay, in order for you to have a strong top or a strong bottom, you have to have a termination condition. The only way to have a termination condition is for price to reach an area and the trigger lines don't break. Does that make sense? So when I get the full reversal and odds favorable, this is a strong top right up until the termination condition. And then this termination condition creates a full reversal. I have a strong bottom right up to this termination condition. And this termination condition that creates a full reversal is a strong top. So a strong top or bottom, guys, isn't the end all be all. It doesn't change the market for days and years, right? What it does is it creates that reversal, but we're still waiting, we're still identifying, and we're still embracing rule number 2. Does that make sense? Strong top because a termination condition creates a full reversal. We have odds favorable momentum, but rule number 2 says don't take it into that area of support. Jay, does that make sense to you? In order for a strong top or bottom, you must have a termination. And in order to define a termination, it must be price reaches an area, no trigger lines break through. Guys, that's defining strong tops or bottoms. And then I kind of broke it down for all the different scenarios. So here's your 50-50. Here's your 50-50 trade, Jay. What's the disadvantage? The disadvantage is the area hasn't broken, right? The smalls have broken through, but the large haven't. So it's not a clear path. There's your disadvantage. Can a 50-50 trade be a strong top or bottom? Can it create a strong top or bottom? My feeling is no. Why? Because in order to have a strong top or bottom, I must have a termination condition. And a termination condition is defined by price reaching the area and no trigger lines break through. If a trigger line breaks through, it can't be a termination. It's a 50-50. It's a potential. So the advantage is that it may break with odds favorable momentum. The disadvantage is that it hasn't broken. So this is not a strong top, nor is this a strong bottom. Does that make sense, guys? Are you with me so far? Embracing the recipe for terminations will identify a strong top or bottom. And then finally, if both the small and the large triggers break through or go to the other side, right? Price didn't reach and reverse. Price and triggers exceeded. Once again, not a strong bottom because the formula wasn't met. Price reaches the area, no triggers through. So not a strong bottom because the rules for termination aren't true. It's still a reversal. It still pushes the market up, but we don't consider it a strong bottom. Not a strong top or bottom because the trigger lines broke through. Strong tops or bottoms. This is your strong top and bottom because price reached the area because the triggers don't break through. So there's our definition for strong top or bottom. Is everybody comfortable with that? We all love to overthink it, right? But if price reaches, triggers don't break, it's not. So Jay Solar, or really anybody, if the market goes up from here, will we consider that to be a strong bottom? Absolutely not. Perfect, Jay. So what do strong bottoms do for us, guys? A strong bottom or a strong top may be that reversal point in the market, right? It may be that price reached that area, it couldn't go any further. Oh my gosh, this is a bottom. When I have a strong bottom, when I have a strong top, this 50-50 trade has a better shot of working. That's how I use strong tops or bottoms, guys. If I'm coming from a termination condition that creates a full reversal, 50-50 trades have a better chance of working. They're still medium probability trades. The path still isn't clear, but they have a better chance. And do you notice how, Jay, not a strong bottom, 50-50 fails. Not a strong top, 50-50 fails. There's a lot of truth, not just coincidence, in that look. 50-50s have a better chance of success from a strong top or bottom. Does that help with the 50-50 on the advantages or the disadvantages? When Fib holds to the tick and the trigger lines can't break through, guys, that's saying something. When you have that 50-50 look and it's not from a strong bottom, that's strike one on a 50-50, guys. It's not a high probability trend trade. So when I'm looking for 50-50s, when the smalls have broken, the large haven't, there's odds favorable momentum, I'm going to ask myself, where's it coming from? And if it's coming from a strong bottom or a strong top, I'm going to continue the process of looking for a potential entry. I wrote this on the chart because I personalized it a little bit because I needed this lesson for me. My money is worth a perfect entry on the 5-1 if the area hasn't broken yet. If my large chart area only has the potential to break, I want absolutely no divergence on my 5-1. I don't want any sign of a slowdown because that begins to take away a second advantage. I want a tiny window of opportunity because I don't want to have a lot of risk on an area that hasn't yet broken. And I want strong triggers on the 5-1. I want odds favorable momentum on both charts because it gives me the strongest chance of that market continuing in the direction of the trade. Go in the other direction. Where's it coming from? It's not coming from a strong bottom. Therefore, the likelihood of this trade working goes down. But I do have odds favorable. I have areas that haven't broken. And then I'm insisting that my entry be perfect. Strong triggers, no divergence, tiny window of opportunity. Guys, this is how, as a new user, if you want to give yourself the best chance of success on these medium probability trades. Embrace the idea that you are unwilling to sacrifice any more advantages as you take the trade. Does that make sense? Jay, did that answer your questions a little bit about it? I tried to go through the whole gamut there, from defining that strong top or bottom, right? And then correlating it into the successful nature of a 50-50, and then just bringing it full circle. And I'm touching on your second question as well. I was about to scroll up and see it. And that's a good thing. So Jay, I want you to do something for me. I want you to replace we with I, because we aren't doing it, right? You're doing it. I don't know, that's just a word of speech. Own it, make it yours, right? So when you are going after a high probability trend trade, do you expect for a bounce in the market so that you can enter on the 5-1? Can the bounce come from a Fibonacci line 2 if the triggers have strong momentum, or does it have to be from a divergence or nowhere? So great question. So here's your answer. And let's do this the easiest way possible. Let me go to my chart reading. Let me look at a couple pictures here. Nope. So let me go to the live market to answer this question, because it's a great question. Can it be coming from a Fibonacci line that created a bounce, right? If you're looking for a high probability trend trade with odds favorable momentum, let's find a good picture of that. Here we go. So what you're asking, Jay, is we have odds favorable momentum, right? Am I looking for a pullback at an area inside of favorable large triggers, even though we're coming from a termination condition, even though we're coming from a Fibonacci-based indicator that created a bounce? Did I say that right? Cool. So what you're asking, Jay, is can I break rule 2 with odds favorable momentum? Is that the short version? How did it work out for you here? It didn't, right? Because price reacts to Fibonacci and it can create a bounce. And guys, when I have questions like this, I love to come back. Could I have taken the pullback at an area inside of favorable large triggers, even though the Fib made it bounce? Well, if I wanted to lose. If I wanted to lose, if I wanted to lose, if I wanted to lose. Do you see how that works? And guys, odds favorable momentum is only part of it. That clear path helps a lot. There's another instance, Jay, with odds favorable momentum into a Fib creating the bounce. And this is why rule number 2 is so important, guys. And this is why I encourage you guys to embrace the idea that you need momentum, right? Embrace the idea that you need a clear path. Sorry, I just jumped out of my classroom. So Jay, if you're taking a pullback at an area inside of favorable large triggers that's coming directly from a Fib that none of the triggers have gone through, you don't have a clear path. You don't know if the market's going to bounce or reverse. You don't have the information that you need to understand whether or not it has the potential to be a strong top or bottom. Because right here, I know that it's a termination condition and I know that I don't have a clear path. And look at that bounce. But right now it's just a termination condition, isn't it? And then the termination condition creates the full reversal. Now I have a strong bottom. And then I get odds favorable. And there's one of those 50-50s. Man, this market moves so much. There is a million examples. You guys know I went back and scrolled on the NASDAQ yesterday, and I found 17 opportunities to make money. 17 rules-based opportunities. So Jay, even with a strong bottom that creates a full reversal, right? That's not the end all be all. It increases the chances. But there's your 50-50 entry. After multiple divergences, right? That one little rule keeps me out of this trade because I'm not willing to give up the advantage of momentum. My money is worth a perfect entry, and it keeps me safe. Pretty cool, right? I love the questions on the 50-50s, guys, because 50-50s are probably going to be your first trade outside of the high probability trend trade. So it's important, right? Embrace those advantages. Embrace the idea that your money's worth it. Gary, weak triggers, right? Anything can happen, triggers. But you do have a clear path. You gave away momentum once, so you're willing to take it, manage assertively. Looks like it slipped you a little bit. Let's see what that entry is. In at 01, yep, got slipped a little bit on the way down for sure. It came back quick, didn't it? Market comes up, quick profits, and then a second divergence with weak triggers on a medium probability trade. And Gary, management was spot on. Great job on that one. Tony, Ron C trade. I love that you guys have given Ron credit for the trade, right? Everything says up, the path is clear, the momentum is perfect from a great bottom. Clear the damage area, get in, get out, get out. Beautiful execution, Tony. And notice that it all stems from odds favorable momentum, doesn't it? And it helps that it's coming from a good bottom. Nice job, man. Great looking trade. All right, Jay. So Jay, you're asking me the same question. You're asking me, can I break rule number 2, right? Price reaches an area, absolutely no trigger lines break through. Are you looking for a high probability trend trade, Jay? That's the trade that you're looking for? And this is the larger time frame, right? Can I show you how easy it can be, guys? And Jay, what you're doing is totally normal because what happened is the market went down and you're feeling a little remorse because you didn't get paid, right? You're like, oh, there was a pullback, there was a potential entry, it went down, but my stupid rules said that Fibonacci stops the market more often than it doesn't. And because this one went down, I'm trying to figure out how to break all my rules. That's what a lot of people do. So is the market coming from a good top or a bottom? Absolutely not. It's not coming from a Fibonacci area that creates a full reversal. It's not a termination condition. So there's our first no, right? Do we have odds favorable momentum on both charts? Well, I can't see the 5-1, but we do. I like it. No termination conditions present. That's not true either. There's your second no. We do, right? So Jay, let me rephrase that. You say that we always look for wicks to enter, right? And guys, this may just be an example of a misunderstanding. So watch this. Strong trigger lines, no termination conditions, right? Jay, I say emphatically every day, wait for your rules to be met to enter. I don't say look for a wick to enter because there's absolutely no way of determining where that wick's going to happen just looking at a 13.2. I say every day use an area of support or resistance inside of favorable large triggers for your entry when the rules are true on the 13.2, right? When you have the advantage of momentum, when you have the advantage of a clear path, go to a smaller chart to use the entry area. So the rules have to be met on the 13.2 first. And we're not trading wicks. Jay, this is how we can go back and study. And let me show you what I mean. If I wait for the wick, it's long gone, right? But if I have odds favorable momentum and a clear path, and I circle the wick after the fact, do you see how it pulls right back to resistance inside of favorable large triggers? So identifying the wicks, Jay, is an after the fact scenario. It is when the rules are met, you can take these pictures, right? So if I go to your picture, and I'm doing that study run, and man, I love these questions. I think they're great. I really do. And I'm doing that study run, and I'm looking for which wicks to circle. This is a potential 50-50 right here. But this one's directly into a termination condition, so I'm not taking this one. And then, Jay, let me show you this. Do you see how this wick, price has not reached the area of support? This would be a wick that I would circle. What market was this? That was the S&P? No, that's great. I love it. Always ask for clarification. Do you know about what time that was? Let's go look at the S&P. Was that today? And you may have had a fib that I didn't. Because it looks like, no, that's not it. That doesn't look anything like it. I'm trying to see if I have it from today, and it doesn't look like I do. Okay, no worries. I was hoping to line it up, but that does make sense. Let the rules be met on the 13.2, and then if we circle the tail, historically, and it lines up with an area of resistance inside of favorable large triggers, well, then you have an opportunity. And you can actually see it 3 times here. That's a great question. And guys, there's going to be moments where you think you have it, but you don't, right? You're like, I think I got this figured out, but man, I think Mark just spoke a different language. Let me ask him for a little clarity. And Jay, I embrace that you do this because, man, this is how things work out. Gary, bad top, 50-50. Divergence directly from a fib. Didn't get filled. I notice your checklist isn't on this one. Guys, here's your crude oil. There's that one. Just didn't quite make it, right? Sometimes it doesn't. That's a bad top, right? It is a 50-50. It is divergence. If you were going to take it, I don't know what apex down. I thought that was a pattern. I'm like, I don't know what apex down is. Apex down means that your apex isn't working. But guys, what happened is this market's pulling up and you're looking for that area inside of favorable large triggers. There's a bigger gap there than you anticipate. Yours is up, Rain. Mine was fine this morning. I didn't use it. I didn't have any rules met. But now we're going what? Now we have a clear path, right? Everything says down. We're just waiting. Guys, sometimes the market isn't going to give you opportunities to get in. I believe there is, Gary. I'd have to open mine. Can somebody help me with that? I know that in your ATM, There's a cancel all. Let me see. I'm going to open mine up real quick and we'll take a look because that's an important question, isn't it? This may help everybody. Guys, how are we feeling? We made it through the second hour. We're waiting for rules to be met, right? Waiting for everything to come together, trying to have those advantages. As we get into the last hour, I want you guys to lead the way. I want you to follow Jay Solar's lead. And ask what you want to ask. So let's go through. Under new, nothing says flatten everything. Under tools, nothing says flatten everything. Workspace, connections, help. I don't see anything that says flatten everything. Let's go to orders, executions, positions. On the empty space, cancel all orders. There you go. Thanks, David B. So Gary, from positions, if you right click and you're in a position, it'll have you close position, flatten everything, and it looks like you can even apply an ATM strategy to the position after the fact. Guys, that's a new one for me. David B, thanks for the assist on that one. So pretty cool. I learned something today, guys. I love this classroom. I get smarter every day too. Smalls are still outside of the large, right? But they're returning. We do have divergence, small triggers inside. Guys, if you were going to activate an order here, what advantage are you beginning to give up, right? Starting to lose momentum, but you do have a clear path and you do have an area inside of favorable large triggers. Uh-oh. Can you try that one again, Jay Solar? Or help me out and define it. When you say it comes from the 13-2 1-to-1, what comes from the 13-2 1-to-1? Because the 13-2 1-to-1s are unique to the 13-2. 5-1 1-to-1s are unique to the 5-1. Range chart 1. So whatever chart a 1-to-1 prints on. No, so the magenta 1-to-1. Did someone ask that question? Did I miss it? Sorry. So what a magenta 1-to-1 is? Great questions today, man. I love this. Bum, bum, bum. Let me get to it. You know I have a picture, right? I'm sorry I missed your question then. Thank you for asking again. So what a magenta 1-to-1 is a small swing 1-to-1. And it's just taking smaller measurements, smaller retracements. Here's all the algebra that goes into it. I'm not going to lie, Jay Solar. It really feels like a second language to me. So when we talk about magenta 1-to-1s, let's do this. It may be a bounce point on a large chart, but we're not respecting it as a termination condition. Okay? So it may be a bounce point, but we're not respecting it as a termination condition. And the same thing on that smaller chart entry, it's not a line for entry, guys. They're just bounce points. When they happen on the small chart, you may get a bounce, but it's not a deal breaker. On the large chart, if it lines up with an area, so hypothetically, you get a magenta 1-to-1 right at Fibonacci resistance or something like that, yeah, then it may add power to it. Awesome. Thank you. I'm sorry that I missed that question. Did that give you your answer? It's a small swing one-to-one. So your large swing one-to-ones. And once again, they are unique to the chart. So your large swing one-to-ones are that big movement, and it doesn't take into account the small little pieces in the middle. And then when you go to the small swing one-to-one, it takes into account those smaller pieces in the middle. Does that help, Jay? When they line up with an area, it's helpful. Or if they line up with a termination condition, it's helpful. But they're just bounce points. It's not a deal breaker. Did that help a little bit? I hope. Okay means it didn't. Oh, it did. Okay, good. How much weight should I give support on the 5-1 versus the 13-2? Do you guys know that I don't weigh importance? My 13-2 says that I have momentum. My 13-2 says that I have a clear path. My 13-2 says that I haven't reached a key Fibonacci area. Right? My 5-1 says that I have two divergences. My 5-1 says that I have weak triggers as my small triggers return. I'm not worried about this fib. My termination condition rules say that they happen on a 13-2. And the only termination condition that I'm looking for on the 5-1 is going to be three divergences in the same location with weak triggers. So I can recognize that I've reached a 5-1 fib. I can recognize that I have weak triggers and two divergences. So I'm probably expecting a higher push up, right? With the loss of momentum here. But my termination condition rules, guys, it doesn't change. Rule number 1 and 2 happen on the 13-2 or your large chart unless it's three divergences in the same location. That's what I'm looking at. So Gary, if I have a fib and multiple divergences and weak triggers and this isn't perfect, maybe I put my guard up a little bit, but this is where it all happens. I would take some pictures and see how it reacts. 14,291. There's that 50-50 with no divergence. Pull back to resistance inside for continuation. Pretty cool, isn't it? Guys, these patterns repeat themselves every day. They repeat themselves on every market. Absolutely, Alan. Great question. Let me pull the picture up for you. Isn't it cool that everything can go right back to the educational stuff? So here's the picture from the 5-1. See how you go from odds favorable, one loss of momentum? It's still odds favorable with your second loss of momentum. Alan, I'm still in this trade, right? Because I don't have a termination condition if my rules are met on the 13-2. But then when it's that third divergence coupled with smalls inside, you go from odds favorable to anything can happen. It adds weight. Do you have to have odds favorable moment or weak triggers for three divergence to be a termination condition? No, you don't. It just becomes more powerful when you visually see that momentum going away. Does that help, Alan? I hope. I always hope. Cool. Not a good top. Great recognition, Rain, right? Odds favorable momentum, clear path, beautiful trade. Just missed you. Rain picture, perfect. And I like this. You just say market flow agreement. If you're going to add that market flow, Rain, what great use of it. You're confirming the momentum, right? Even though it's not a good top, you still have odds favorable, clear path, everything is met. And if you're using the checklist, guys, it even says you can take a trade without a good top or a good bottom. Just manage it tightly if the divergence is true. Rain, are you using your 8 range for confirmation for entry yet, or only for momentum and direction? Because the next stop on this one, guys, is if you're saying everything's met, right? Everything looks good. I like it. I would take this trade without hesitation. I'd get in at the area without hesitation. And then market flow prints. One of those signals when the rules are true. Guys, this may be an opportunity to go ahead and get into that trade. Right on. Plus looking for the HVA trade setup. I like it. So you've got momentum, you've got direction. It did everything that you hoped it would do, but it didn't quite hit your entry. After that confirmation, I'm not shy about getting in because it happened from the area. You just didn't get filled. I think this is great usage of it. Nice job, Rain. Exactly. You had the yellow paint bar, you had the arrow. So you could have gotten in because the rules were true. And always let that be part of the phrase, right? All right, Conrad, you felt very cautious because we just bounced back from support. You do have odds favorable momentum. Termination conditions, no. Once again, you don't have any areas inside of favorable large triggers. So let's look at this on a bigger scale. What do you say? So Conrad, it's a 50-50 trade, right? Where are you coming from? Good top or bad top? It's not a termination, so it's a bad top. So the likelihood of this one working goes down just a little bit. And that's cool. But it's still odds favorable. It's still 50-50. But do you see how it's 50-50 on two areas? Not only the one-to-ones, but also this fib here. There's two areas that haven't broken yet from a bad top. And then when you come over to the 13.2 and you're looking for entry, you're also 50-50 on the 13.2. So you've given away the clear path for sure. You do have odds favorable, but it's from a bad top. And you get in at the midband. And basically what it is the market said, because of the bad top, we're going to make it to that area of support, and at 50-50, let's continue the move. Let's go see if we can catch that fib above us. Does that make sense? It's a medium probability trade. I really think it would create some advantages for you to get that new setup from John. Yeah, absolutely. But I think getting it to where your 13.2 entries look exactly like they would on a 5-1, it'll help a lot. Because you'll have those trigger lines, you'll have those areas inside. It's going to help you know where to put a stop, right? It's also going to help you make sure that you do have all those advantages. Great job, though. You're no longer confident in this short. It's just a 50-50 that didn't work. That's all it is. Just a 50-50 that didn't work. And it just goes back to that whole not from a good top, less likely. Great pictures, though. Awesome annotation. You know I appreciate that. Guys, what do we see here? Weak triggers, termination, all the way up to the midband, right? Large triggers don't follow and price closes the gap. Price reaches that divergence low. Trigger lines, one above, one below. The trend has changed. Guys, this is your go make a sandwich. Go make a sandwich pattern. You don't have a clear path down. You don't have a clear path up. Your large don't agree with your small, right? Your large don't agree with the trend. Guys, you don't know what's going to happen here, do you? The only thing you're sure of is that your rules aren't met. Conrad, wasn't this your 50-50? It looks like it. Not from a good top. It is a 50-50. No divergence. Pulls back to resistance. That one still might have tapped you out. But man, I love this look on the 13-2. Yeah, I would have too. But at least it would have been easier to identify. How about this one? Odds favorable. It's a 50-50. No divergence on a pullback. Didn't quite make it. Do you guys ever go back and just circle when the rules are met? You ever get to the end of the day and say, I wonder if I missed something? Let me go back and circle. I wonder if this was a trade that I should have taken. Oh, nope. It's a termination condition. Make that part of your day, guys. And if you're missing a lot of trades, you have to ask yourself, why am I missing these trades? What is it about the trade that I wasn't confident with? Were my rules met? Guys, here's that bad bottom, right? Straight to resistance. None of the triggers even close. Large triggers don't follow, guys. We can anticipate that snapback to the large triggers, which means you're not going long here. Did anybody take that long in the S&P, hoping it would work? Because rule number 2 said don't, right? Good bottom or bad bottom? Bad bottom. The mid-band's reached, isn't it? Where are my large triggers? They're a full bar away, guys. If nothing else, can we say that price may close the gap to them? Gap theory. Guys, I'm going to take a minute. My mouth is dry. When I come back, let's talk about what you guys want to talk about. We're going to leave it up on crude. I want to see, just for grins, if price decides to snap back, right? Shogun, take a picture. Tell me why you're saying what you're saying. And from this bad bottom, because the mid-band was reached, because the triggers didn't follow, let's see if it goes and tests that final area of support. Shogun, get me a picture. I want to see what you're talking about. Guys, I'll be back in just a few minutes, and we're going to finish strong. Post pictures, ask questions, let me know what you want to talk about. Mic silence for a minute, guys. Can we get like a hallelujah or something about patterns? Because at 11:17, I said because of this look, it's likely to pull back to those large triggers from the bad bottom, right? And then just for grins, I said, hey, let's see if they get to that next key Fibonacci area. What do you think? Is this a pattern that could help you out? Is this a pattern that could keep you from looking for the long? Guys, I don't recognize these patterns on day one. You won't recognize these patterns on day one. Your job right now is to do this, is to take a picture of my screen and to draw an arrow right here, right? Use that call out button and type it out. When price accelerates away from the large triggers, and we'll say and smacks into an area, and the large triggers remain a full bar away, it typically, but not always, closes the gap. Guys, this is your gap theory, right? And then take this one right here. When you couple a bad bottom with the gap theory, tends to find the next key fib area. Guys, you know where the next key fib area is. You have Nexgen. So what does this do for you? It keeps you out of a long, doesn't it? It doesn't get you into a short. There's no short here. But it gets you looking for opportunities. Guys, take this picture. Share it to screencast. And once you get that screencast link, go to your spreadsheet. Ready? Under chart reading things. Let's make a hyperlink so we don't have to guess what the picture is. Gap theory from bad bottom. Let's call it unfinished business. And now I can go back and study that, guys. I can recognize this pattern, the likelihood because of the pattern. What do you suppose the most important thing about this look is? For me, it's not taking a loser, right? It's letting my winners and the profits from my winners do what they're doing and not throwing it away on a low probability trade. Now I have that termination condition. Oh, absolutely. Sorry, Alex. There you go, bud. And guys, if I ever mark something up and you want a copy of it, just let me know. So now we have a termination condition. In order for this to be a good bottom and not a termination condition, guys, what has to happen? Do you remember the recipe? Termination condition must create a full reversal. It's starting to happen. Not a full reversal yet. My small triggers are still on the wrong side of the large triggers. But isn't it pretty amazing, guys? Look at Fibonacci and how well it holds. You knew about this line. When did you first know about this line? 10 a.m. You knew about it. There's that gap theory. Finish the move. Getting that full reversal. See if we can find another gap theory. all the way back to support. Large triggers don't follow. Closes the gap. Look at that. Once again, bad bottom, all the way back to resistance to the mid band. Large triggers don't follow. Closes the gap. Oh, not again. Closes the gap. Guys, these patterns repeat themselves all day, every day, over and over. Shogun, consolidation. Trend is yet to reveal itself. Man, why are you looking at a 5-1 for consolidation? Let's go to the S&P. Oh, that's NASDAQ. That's not the S&P. That's what you were looking at, right? Is that right, Shogun? Is that the right time frame? Three divergences. All right, cool. How did you pick that line as your level? Did you just try to split it in the middle? Just curious. I might get smarter here, so I always ask questions when I don't understand something. What you got here? Okay. The old Ichimoku, huh? I've never heard of that. That's awesome. But what are you witnessing? You're witnessing those fluctuations, right? That smaller, faster chart is going to show a lot of movement. Up, down, up, down, up, down. That's from like 1026 to 1120. So let's see what it looked like from 1026 to 1120. This is it right here. Weak triggers, right, Shogun? Weak triggers with divergence. All sorts of momentum loss. So we have losses of momentum, losses of momentum, losses of momentum, right? We have resistance to hold. And then we have that gap theory. And I just think it's cool. I like to see the correspondence. And then from that bad bottom to resistance to the gap theory, look at that. It made it to the next key area. And Shogun, what you did is you used that 5-1 and you didn't get caught up, right? That's it. It made it to the tick. To the tick. Bad bottom, gap theory, finish the move. Oh my gosh, is it just me? Or did we just take that same picture on crude oil? The only difference is this is a fib. The S&P had a 1-to-1. All of this indecision that you see on the 5-1, you didn't have rules met anyway, right? Awesome. And then Shogun, can I try and simplify that for you a little bit? Because I know you're a thinker. How's that? Do we need the Ichimoku span B on a 2-hour time frame to recognize that the rules aren't met? Right? Do we need the 5-1 to recognize that the rules aren't met? Isn't that cool? And I'm not saying abandon what makes you feel happy. I would never say that. Guys, I will never tell you to not use what you want to use. But check this out. I'm going to take that same look. Shogun, is the trend up or down? Where it's red, right here. I'm going to show you guys how easy life can be. Some of you are going to fight it because you're fighters, and that doesn't bug me. No, not at all. If the background on your large chart is green, Shogun, you're in an uptrend. Only look for rules to be met for high probability trend trades long. Why? Because in order for that trend to be up, your small triggers are above the large triggers, right? There's no reason to ever fight that. When the trend is down, only look for rules to be met for high probability trend trades short. Why? Because your small triggers are on the wrong side of the large triggers for longs. You have to, there's no we, that's you. You're choosing to wait for a 12 p.m. bullish to start. Gosh. Shogun, I'd love to see a copy of your rules. So check it out. If I'm only looking for rules to be met for shorts when it's red, I don't have a met. I don't have strong triggers, right? And even if I wanted to take it without momentum, I get 3 divergences in the same location on the 5-1 while this chart is still red, letting me know don't go short, right? Rules keep me out of the short. And now the trend is up. The smalls get above the large start to turn, but it's directly into a termination condition, right? And it's directly into a termination condition with the gap theory. I'm not looking for a long trade because my rules aren't met. And man, we're just letting it sort out. And you can talk about bearish and you can talk about bullish and your itchy can moko all that it wants to. But if you keep it, see, limited consolidation. Who cares? Rules not met. Look how consolidated it is now and the rules still aren't met. And look how spread out it looks, but the rules still aren't met. There is a trend. The trend is up, but the rules aren't met. Isn't that cool? So, simplicity. And Shogun, you look at things a little different than I do, and that's totally cool. And honestly, I learn stuff when you and I start having these conversations because I try to come up with a different way to say things. But if we're boiling it down to its most basic element, just waiting for the rules to be met. That's all it is. I'm not smart enough to concern myself with all the other stuff. I get confused. I see something sparkly. But I do love a good bottom that creates a full reversal that gives me odds favorable momentum. Don't you guys? Well, that's it. So Shogun, stop worrying about consolidation because if you're looking for consolidation, dollars to donuts, you're going to get your ass kicked at least 3 times before you figure out it's consolidation, right? That seems to be the number. So what if it's just rules met? Because the rules can't be met in terms of consolidation, right? Because you're trading in determination conditions or you don't have momentum. Does that make sense? And guys, this is where I try to simplify for you. This is where I try to make your life so much easier. Do you know that I still get confused, true story, on what a bear and a bull is? I still have to Google it every time I think about it because I don't know what a bearish and a bullish market is. The only thing I know is whether it's going up or down, and I use the color green or red. Not a smart man. Just not giving it up, huh, Paul? Those sons of guns. It missed us. They didn't get the memo. So what are we looking at now? 69.12 is a what in the moment, guys? Termination condition. So rule isn't met. Rule 2 isn't met. Gosh, if only life could be that simple. Anyone else been married as long as I have been? Don't tell my wife I said that. Wouldn't it be great if your spouse was color-coded? She's red. Don't say anything stupid. She's blue. Give her a hug. All right, 50-50. The smalls have broken through, but the large have not. Where are we coming from, Conrad? We coming from a good bottom or we coming from a weak bottom? Absolutely. Does that help our chances on a 50-50? What do you guys think? Yes. But if divergence prints, does that hurt our chances on a 50-50? There's potential, but it's not definite. Can I identify an area inside a favorable large trigger? Should I get a pullback? Guys, do you see how quickly the analysis can happen? Where am I coming from? Do I have odds favorable momentum? No, Elvis, he is working tirelessly to make Nexgen even better than it is, to modernize everything, to put things together. So his trading has taken a back seat for the sake of running a company for at least the last week. Man, he's doing great stuff, though. It's so cool. I love watching my brother work. I had no idea he was as smart as he is. He was in the room Saturday. So there's your divergence on a 50-50, guys. I didn't know that we were looking for words on Apex. What are you curious about? I know that they sent out an email yesterday saying that their site was under for maintenance. He does every now and then. 50-50, guys. Smalls are barely through. Divergence is printed twice. Is there something going on with Apex, Elvis? I've had zero issues, no worries at all. I don't know if that's the case for everybody. The site's not responding. Web server's down. My browser's working, Cloudflare's working. Yeah, they sent a warning. They said, hey guys, website's down. Data's still working though, right? Is your Rhythmic Trader still working? I didn't know that that was even going on. Didn't even look. I didn't take a trade this morning, so. I don't know. I guess it depends on what you're maintaining, Gary. So let's talk about advantages. Good bottom, right? Termination creates a full reversal. I love that look. My small are barely eking through. I mean, barely eking through. I don't care for that look, but I do have odds favorable momentum. I have two divergences on an area that hasn't broken. Some of you will take this trade, some of you will not, right? What do we have going on, guys? Two divergences. Is this single divergence a strong top? Is it a termination condition that creates a full reversal, Paul? Is it a strong top? How easy is that? Yeah, no, absolutely, guys. A termination condition that creates a full reversal is a strong top. Clinical definition. Paul, did you get the pictures that I made earlier? I kind of put a little slideshow for good tops and bottoms. Wrangling kids. So here's the first picture. In order, and guys, I'm reviewing this because nobody's asking questions, so here we go. Let's review good tops and bottoms, guys. Price reaches an area, no triggers go through. That's the recipe for a termination condition, 100%, right? It really hasn't changed. Hey, good morning, Safia. Embrace this recipe for good tops and bottoms, guys. Termination condition creates a full reversal. There's your termination condition defined, right? Price reaches an area, one of those key areas, trigger lines don't break. That's how you get a good top or bottom. And Safia, great timing. Thank you for this. Safia made me think about this morning. Elvis, no worries, man. It's always good to see you in here. And then this is your 50-50 look, right? And it's not coming from a good top or bottom. And there's two 50-50s that fail, even with full reversals. This can't be a strong top or bottom because it's not a termination condition that creates a full reversal, right? Not a strong top or bottom, even though there's a full reversal. And then finally, of course, the final one, if the trigger lines get to the other side of it, guys, it's not a strong top or bottom. And what I like is that not strong top or bottom, there's a 50-50 that fails after a bad bottom. Paul, you've been reflecting over a long weekend. You need to stop staying busy. What if you only traded after a good top or bottom? What do you think if you only traded after a good top or bottom? Have you tested it? Guys, I know that I sound like a broken record. Anybody that's ever done this for a week, raise your hand. Anyone that's ever spent 7 days, Simmer Live, doing nothing but this checklist, making sure yes on everything. Raise your hand, give me a thumbs up, give me an amen, hallelujah. I don't care what you give me. Let me know that you did it. Anybody that did it, did you do less than 75% winners? Has anyone done worse than 75% winners following this checklist to the letter? Because I've had Nexgen users put it through simulation processes over like 400 or 500 trades, and it's been 82 to 85% almost every time. I'm curious if anyone's getting results that differ. Because what I have found is that anytime somebody follows this, they win. Is that weird? Does that sound stupid? Anytime somebody's followed this, in my history, they've made money. So the real question is why? Why do you want so much more? Why do you want so many other charts? Why do you want to take so many different trades? It's to keep busy, right? Guys, life is busy enough for me. I sat and watched my screen for 2 hours this morning. My rules weren't met. I didn't take a trade. If you've been with Nexgen any amount of time and you're not trading successfully yet, guys, it's because you're looking for more. It's because you're creating extra rules. This is boring as all get out, isn't it? 3 trades a day. So at the course of, if you do 3 trades a day, however long it takes you to hit 100 trades, right? Let's say you win 70 of them. $70 trades. Is it just me? $300 a trade conservative? That's $21,000, right? Minus the 30, 200 each, minus 6,000. That's about $15,000 on a 2 lot. I'm accounting for losses, guys. Give or take, hypothetical, all that good stuff. That's a 2 lot. It doesn't have to be more. Let it be better. Guys, I've never had anybody follow the checklist and do well. I don't think we've even talked about it in here. But if it's not working, yeah. I don't know the details behind that one, Elvis. But yeah, if there's challenges, guys, it's money. Do your due diligence. Guys, following this checklist is very much like when I was a personal trainer. Everybody told me that they wanted abs. Everybody told me that they wanted to lose weight. Everyone told me that they wanted to gain muscle, but very few people are willing to do what it takes to get there. Um, I want abs, but I don't want to stop drinking, right? I want abs, but I still want to eat McDonald's twice a week. I want to get stronger, but I don't want to pick up heavy weights, man. It hurts my neck. Um, and guys, sometimes your goals, your effort has to reflect your goal. If your goal is to be a profitable trader, doesn't it make sense to follow a plan that's been proven to be profitable? I used to always tell people that told me their diets were perfect, right? Take a picture of everything you eat and send it to me over the next 24 hours, guys. Very few people will take that picture, or they stop sending pictures because they're breaking their own rules, right? They're breaking their own rules. They're changing their own path. Doesn't mean that they're bad people. It just means that they're human, that they've got to get that level of control. Intermittent fasting, don't eat anything before 2 p.m. See, that's an incomplete process, right, Shogun? It doesn't tell me what time you wake up. It doesn't tell me what you had to eat the night before. It doesn't tell me how long you fasted. It just says don't eat anything before 2 p.m. That's great if I wake up at 1:30 in the afternoon, isn't it? Man, I get it. My wife loves intermittent fasting. I don't care for it. I get hungry. I've got that old bodybuilder mentality. I eat 5 times a day, typically. I'll do 3 meals and 2 snacks. But what happens, though, is when you do it properly, and this is totally off topic, when you do it properly, you stop getting hungry. My wife gets amazing clarity and very little diet, and she also goes more of a carnivore, but there's all these different things, man. Every diet works if you use it. That's what I'm saying. Every diet will have you lose weight if you follow it. This is the diet that has been proven to work. The only time it doesn't work is when you stop using it. Paul, or anyone else listening, maybe not Paul specific, do you remember that there was a time not long ago where you said, you know what, Mark, I'm going to use a 10 lot and I'm only going to use it on perfect trades so I can get funded? Do you remember that? And then once you got funded, what happened? You stopped taking perfect trades. You abandoned what had been proven to work. Paul, your link isn't working. Guys, that's normal. There we go. So, Paul, is it a termination condition that creates a full reversal? Let's keep it basic definitions. It's not. It doesn't create a full reversal. But what it is this termination condition says don't go long, right? Right here? This termination condition says don't go long. These trigger lines suggest the market's still going up. You're coming from a termination that creates a full reversal. This termination says don't take this trade, right? It says wait, just be patient. And it keeps you safe. Rule 2 keeps you safe. This isn't a termination condition that creates a full reversal. What this is price reacting to resistance, right? Small's turning against it. It's just price reacting to resistance. This great bottom pushes it up right to a key area. Right from that key area, the sellers go, no, and push as hard as they can. But the buyers have already established a bottom, and they said, you know what? We're going to go back up. And then, Paul, what do you notice? 1, 2, 3 divergences in the same location, right? This adds weight that now that bottom's probably pretty solid. So This isn't a good bottom because it doesn't create a full reversal. This is an indication that the market wants to go up higher. These large triggers that don't blink is an indication that the market wants to go up higher. These smalls rolling coming above the large with a clear path and pull back here. Absolutely I do. But if you let it stay in its most simplistic form, right? What's a termination condition? Termination condition is an area that's reached. No triggers break through. What turns the termination condition into a strong top or bottom is it has to create a full reversal. That's what happened off of the bottom, right? And now we're just shenanigans in the middle. But right here, Paul, what did you have? You had small accelerating. You had large through the areas, right? Clear path, good trigger look, one divergence, tiny area for entry inside of favorable large triggers. You do have two divergences, so you're certainly managing, but it creates an opportunity. That's a great question. Hey guys, that's why I made those pictures today. That's why I made this picture. Defining strong tops and bottoms. Embrace the recipe for the termination condition, right? And then it has to create a full reversal. That's the part. Otherwise, it's just a termination condition. So price retraces all the way back to resistance, no triggers through, just a termination condition. Price retraces all the way back to resistance. Great question, Paul. So what do we think? Does anybody get to walk out a little bit smarter than they walked in today? I hope. Price accelerates to the mid-band. Large triggers don't follow. Large triggers are up. Small triggers are down. Guys, there's always going to be something to learn. There really is. There's always going to be something to learn. I don't care how long you're in this classroom. I want you here until you're consistent. We had some great examples this morning. Guys, do you remember? We had a series of 5 chart pictures, right? And we were able to turn them into 2 charts and have the same information. No, Safia? Thanks, Eldest. Safia, in order for a good top or bottom, do you have this written down somewhere? A termination creates a full reversal. The only way to have a termination is if price reaches the area and the trigger lines don't break through, right? Does that make sense? That's the only way. It's the only way that you can have a good top or bottom is if you have a solid termination condition. That's it. If the trigger lines break through, it's not a good top or bottom. Why? Because it's not a termination condition. If all the trigger lines break through, it's not a good top or bottom. Why? Because it's not a termination condition. Does that make sense? The market can still reverse. It can still go the other direction. But keep it simple. No, they can't pass it all, Safia. In order to have a clear path, they have to all pass. But not for a good top or bottom. You're just talking about an area that breaks, right? When both the small and the large break through support, it begins to act as resistance. Not a good top or bottom. Good tops or bottoms are literally from tops and bottoms. Does that make sense? Nice management. You're welcome, Safia. Did you get the pictures that I sent you? Because you really inspired the class move today. Conrad, perfect execution. Odds favorable. You hadn't reached anything yet. Pull back to the area. and you recognize that everything changed a little bit, beautiful profit taking. Nice job. No worries, and if you have questions, let me know. Guys, you did a great job today. Great questions, thank you. Keep them coming. Do not stop asking questions. I don't care where you are in your process. Don't stop asking questions, guys. Make it a point to get better every day. Have you guys seen this? The simple plan for consistency. Don't ever fight the 13-2 direction or triggers, ever. Trend trade checklist. Look at that. Beautiful. Simple management. There's your rules for the 50-50. If you're curious, takes 2 charts, guys. I like it, Gary. Keep breaking it down. I think you're going to find it makes life a lot easier for you. Your chart reading is amazing, but you're giving yourself so much to do that it becomes difficult. Guys, your assessment of what's happening in the market should take you about 4 seconds. About 4 seconds, I can determine that I don't have odds favorable momentum. No trade, right? 4 seconds, I don't have odds favorable or a clear path. No trade. 4 seconds, I don't have a clear path. No trade. How easy was that? I don't care about bullish. And check it out, Shogun. There's your Ichimoto. And it's still bouncing, isn't it? Right where you put that line. They're still trying to figure stuff out. Let them figure it out. Let's wait for a clear path. I like that. You know I'm going to Google it and try and learn it. Maybe not learn it, but at least get more familiar, guys. I'm not so arrogant to think that I don't have something to learn from you guys too. So thank you when you share that stuff. Guys, I'm going to call it a day. I'm going to go see if I can't find me a high probability trend trade. Enjoy your afternoon. Do a little market replay. Guys, I will see you tomorrow, 9 a.m. We're going to do it again, just like we did today. If you were sitting on the sidelines today, not being real vocal, man, get your megaphone. Start talking to me. David B., Timier, Rain, guys, I know you're taking trades. Alan, I know you're taking trades. And maybe in the back of your head, you're thinking, well, I don't want to bug them. I've been around. I'm an owner. This is for the new people. Guys, this is your class too. Show me what you're doing every time. We might get a little bit better, right? Mohammed, I want to see your charts too. Guys, I'll see you in the morning. You guys be good. Right on. Thank you for that, Shogun. And it makes sense that it's coming from Shogun, right? You guys take care. Be good. I will see you in the morning.